Oil prices have plunged by around 6% after the world's major exporters agreed to phase out production cuts implemented when the pandemic disrupted global fuel demand. Earlier, OPEC and its allies failed to reach a deal as Saudi Arabia and the United Arab Emirates disagreed on how much more oil each would be allowed to sell overseas. But as Mobin Nasir reports, demand for crude could take a hit just as its supplies are finally ramping up.
Instead of being out at sea, hundreds of fishing boats have been docked in the South Indian village of Rameshwaram for days. Fishermen say rising fuel prices have left them high and dry.
The price of diesel is $1.31. Lorry drivers can charge extra to compensate for the higher price. But how will we get that extra money when we go out to the sea? It's been more than 3 days, during which only 150 of the 700 boats went out. The federal government has to intervene to save the fishing industry.
Fuel costs in some Indian cities have shot up to record highs, driven by rising international crude prices. Many other countries that rely on imports are also struggling due to mushrooming costs. They had expected OPEC and its allies to increase output at the beginning of July, which would then bring down prices. But those hopes were dashed when Saudi Arabia and the UAE disagreed on production caps. The two sides reached a compromise at a last-ditch meeting on Sunday, and the cartel says it's boosting global supplies.
So yes, we will keep the 400 on a monthly basis. We will review in December. We kept our window open for review.
Collectively, OPEC Plus will hike output by 2 million barrels per day by the end of this year. The UAE, Saudi Arabia, Iraq, Kuwait and Russia will be the biggest beneficiaries as they've been allowed to increase their baseline output, the maximum volume they're able to produce. The announcement is cooling international crude prices, which had risen to their highest level in 2.5 years. But some analysts say just when supply is finally ramping up, demand could be plunging once again due to a resurgence of coronavirus infections in many countries.
I think there is significant concern about the global growth prospects against a backdrop of rising Delta variant infection rates, and we're seeing that played out. We could well see global oil prices fall back towards $65 a barrel over the course of the next few weeks.
A fall in international oil prices would provide a much-needed boost to many businesses, including the fishermen of Rameshwaram. But it may come at a high cost, as yet another wave of COVID-19 devastates lives and livelihoods. Mobin Nasir, TRT World.
Well, for more on this, Ellen Wald joins us now from Jacksonville, Florida. She's president of Transversal Consulting and is the author of Saudi Inc. Great to have you back with us as always, Ellen. Now, oil prices have taken quite a significant plunge on news of this OPEC Plus deal that they would pledge to return levels to pre-pandemic levels. Why have we seen prices fall around 6%? Is it just about this deal or is there something else at play today?
Well, I think it's partially about the deal because the deal is definitely returning more oil to the market than was expected, particularly based on what we heard from OPEC the last time they tried to get a deal together. So the market is definitely reacting to that. But I do think that the market had kind of overheated as well for where demand really was. There was a lot of optimism and exuberance, and there were a lot of banks and other institutions making some very high calls for oil, $80, $100 oil. And I think that they were kind of overshooting where demand actually was. And inflation is also taking a toll on oil prices as well. So I think what we're seeing is kind of a big sell-off today. And that's a reaction to all of these factors.
So what do you make of this deal? Essentially, they've pledged to increase output by around 400,000 barrels a day until the end of 2022, eradicating those drastic cuts that they implemented last year as the pandemic was unfolding. Do you think it strikes the right balance in terms of meeting the rise in demand as the global economy reopens and the needs of producers and consumers?
Well, I do think that that's definitely what the market was looking for. At the beginning of July, I do think by the time that oil gets on the market, we may see demand starting to drop just for seasonal reasons. Really, once the autumn months come up, oil demand tends to drop. But we're definitely, entering time of higher demand. I think there's an expectation that come September, people will be getting back to work in the office, and so commutes will go up as well, and so demand may hold steady for that. But I do think they are running a bit of a risk because it's possible that demand won't be as strong as expected, particularly as we get into 2022. But as OPEC likes to say, well, now they meet every month and they can simply just revise their production plans based on what they're seeing in the market.
And what a difference a year makes. I mean, just last April, you and I were talking about how West Texas had plunged into negative territory for the first time. The price is now sitting at around $70 or just under $70. Brent crude is hovering around that amount as well. Where do you see prices going from here? Are we likely to see them go further down, or will they be propped up in the near future? What's your view?
Well, I do think that the increase in production and then the expectation of more oil on the market is going to keep prices from rising too much. Though I do think it is important to keep in mind that production in the U.S. is much lower than it was last year or the year before. It's only around 11 million barrels a day, whereas before it was up at 13 million barrels a day. And one of the things that this OPEC decision has an effect on is that it may actually help keep production in the U.S. a bit down, and so we're not necessarily looking to see a kind of surge in U.S. production that we might have expected if prices had continued to go up into the 80s and beyond.
Okay, let's see what happens. Ellen Wald, always a pleasure. Thanks as always for your analysis.